It's Thursday, the 30th of October. My name is Jason Sen. If you don't know me, I have been a trader since 1987. I have been a technical analyst for the last 20 years. And during that time, I have also been training traders for the last 20 years. I provide a daily technical analysis-based signal service, which covers gold, silver, oil, the major Forex pairs, and even the US stock indices. If you're interested in subscribing, please check the description box for links to my website, and you can also contact me directly whenever you have questions about the service if you're thinking about subscribing. Okay, let's get on with the analysis today. I'm looking at gold. Gold's had taken a bit of a tumble recently. Now the picture's getting a little bit cloudy because I think we're in a consolidation phase. So I'm just going to show you that. You can see on the daily chart we've had some big red candles. We've come down. More recently, it's been a little bit confusing with these doji candles. They're not so clear on the daily chart because I've got my Fibonacci levels on there. So let's go to the 4-hour chart. So here's the decline. You can see we are in a short-term bear trend. A correction to the bull trend. I don't think this is going to be a sustainable bear trend, but I do think we probably have further to go on the downside. So you can see we're seeing a series of lower highs and lower lows. Now, yesterday we managed to get through some resistance of 4,000, but we didn't get too far. It was actually this trend line here that, and let me show you where the trend line goes back to. It's actually this trend line here that goes back to August that, oh no, sorry. Let me get that right. It's actually this trend line that goes all the way back to this trend line. That goes all the way back to April. So a very long-term trend line, really. And that was the trend line that held us yesterday. And we've reversed from there. Now, as you can see, in the very short term, since the 28th of October, the last couple of days, we're in a consolidation of the correction phase. So there's consolidations all over the place. We're right in the middle of that 2-day range. So I don't know what happens next. I'm waiting to see if we break above yesterday's high, which was 40.30, or we break below this trend line and the correction low at 38.83. Which way do I think we're going? I think we'll break to the downside, and I think we'll get to around the 30.30, 30.20 level for a buying opportunity. I am still looking to get long when we hit an important support level in gold, and I just don't think we've got there yet. And I think it's the same picture for silver too. The chart looks very similar. We're in a correction phase. In other words, we're correcting down to the downside in the bull move. I don't think that correction phase has ended just yet. I was a bit confused yesterday because we broke up through the 23.6% Fibonacci level. We didn't get to my next target where I would have been shorting around the 48.90, 49.00 area. So I think, as I say, in the short term, we are trending down. I think eventually we will break below 45.50 and head for 44.50, 44.00, which will be a really good buy area. But I'll have to keep an eye on that, and I will have to revise as we go along. So for today, I don't really have any trade ideas for gold and silver. For me, it is a wait and see approach and wait for some confirmation either of a break up or of a break down. What I am more focused on today is the pound. The pound has been declining significantly recently. Not a surprise, the British economy isn't in the best state. So I have been expecting the currency to weaken anyway. This was tricky. It wasn't easy to get into short positions, so I've just left it and waited for something that provides me with some more clarity. The break below this trend line here has given me that clarity. Now I'm looking at the 4-hour chart here. As you can see, we're now starting to move away from the moving averages on the 4-hour chart, which are starting to turn lower. On the 1-hour chart, we've been trading below those moving averages for quite a while. If I go to the daily chart now, just to try and get a bigger picture, you can see that we have broken below the trend line. We've broken below the 200-day moving average. We did all of that yesterday. So I think this is quite significant now. And in fact, we're bouncing back towards the trend line. So that might be an opportunity to get into a short position. And that area is around 132.16 I've got as the one. I call it 132.20. We've got the 200-day moving average at 132.45. So maybe that is an area that you want to consider getting into a short position if you agree with me and if you think that the pound will continue to fall against the dollar. Where am I looking for us to go? Well, ultimately, the first target would be around the 130.00 area. So Could I argue that this is some sort of head and shoulders pattern? Maybe I could. I'm not really sure. I could argue that that might be the left shoulder, the head, the right shoulder. It's not very symmetrical, but all in all, I do think that this market will start to decline. And if I put a trend line going from here, oops. There you go, that's a bit clearer. I don't really think I can argue that this is a head and shoulders pattern, but it is quite a negative pattern nonetheless. And you can see the trend line that we have at the moment is bang on the lows around 131.40. So a break below there would also be further negative confirmation. And as I say, 130.00 would be my target. So that's that's a couple of hundred pips down from where we are now. I'm not expecting that to be a great support level. I'm really just using that as a target, and I think we will see further declines, but I will go through it as the days progress and keep you in touch with progress on this trade idea. The pound actually looks weak against a range of currencies, the Aussie dollar in particular, but I think I've probably missed that move. So what I'm focusing now on is the pound versus the New Zealand dollar, which has just broken this little short-term uptrend here going back to the 27th of July. We only just broke that this week. This is the weekly chart that I'm showing you now, after a pretty negative candle the week before. The negative candle the week before was not a bearish engulfing candle, not quite, because we didn't make a new high, but we did break the low of the previous candle. And again, seeing some further downside, broken the trend line. So I'm looking for further weakness in the pound versus the New Zealand dollar. Now, 220, I'm going to call it 227.00, 226.90. That will be my first target. You can see we're heading towards there quite swiftly. There may be a little bit of support there. In fact, I wouldn't be surprised to see some sort of bounce off there on the first test. So again, we will monitor that in the days ahead. Let me switch to the daily chart. At the moment, we are testing the 100-day moving average, and we are holding that. So we might get a bit of a bounce back, which would give us an opportunity to get into a short position. I'm going to use my Fibonacci tracements to give me a quick idea of where we could get to and where I might want to get into a short position. You can use these Fibonacci levels as a guide if you're interested in jumping into a short position. Around 30 to 30.70 looks like a great entry. I don't know if we will bounce that far, but we've got the 38.2% Fibonacci, and we've got the 50-period moving average, or the 50-day moving average, the white line, coinciding with this little swing low here at around 230.32. So that 230, now I'm going to call it 230.40 up to 230.80 looks like the strongest resistance level, but we may not get there. So you may want to start scaling into short positions if we do bounce off the 100-day moving average. Obviously, if we start breaking below that, that's going to be quite significant. So if we start breaking below 228.00, I will consider that the 100-day moving average has been broken, and the first stop would then be 227.00. So that would be about a 100 pip drop. As I say, we might bounce off there. We've got some price action confirming the fact that we have good support around that 23.6% fib. And with this trend line that I've just added going back to the 27th of May, that also reinforces that 227 area as potential support. 200-day moving average is also moving up slowly towards that level. And by the time we actually get there, the 200-day moving average might be offering some support. So that 227.00 area will be very key. As I say, probably get a bounce off there on the first test. And depending on the strength of the bounce, will determine, in my eyes, how strong or weak the market is. I'll be looking at my fib levels and short-term moving averages to try and gauge that bounce. But eventually, I wouldn't be surprised to see a break below that level. I'm probably talking days and weeks ahead of where we are now, so I won't jump the gun too much. But that's my perspective for the pound. I think it will continue to weaken against other currencies. I hope that's been helpful for you today. Please do join me again tomorrow for further analysis on these markets.